All right. Well, you guys have already smashed the record for our AMAs.
No way. You haven't even
Yeah,
started yet.
yeah, I know. The most we've had in an AMA is like 20 some people.
Homies are coming in force.
Yeah, we'll get to 100. Don't worry. But I think the one issue that I noticed is I guess you're tweeting from your personal Twitter.
Yeah, there's some, I guess, organizational chaos.
Yeah, no worries. But yeah, like when you do, like for us, for example, when we have like an AMA, we usually announce it from the official Twitter, just a wider reach.
Are you guys recording this?
Yes, I'm recording it and I'm also live streaming it to YouTube right now.
Oh, sweet.
But I mean, it's being live streamed for people who want to watch a live stream, but the live stream for me personally is like take it or leave it. It doesn't really change much about it for me, but that is there. And I'm also recording.
Cool.
How's it coming with Apollo?
1 second.
He let me know that he had to run out of the office for a minute. So he might be back later, but he said to just kind of start without him.
Oh, okay. Gotcha. That's fine. I mean, if he's gonna be like just like 10 minutes, I would want to wait for him. But if it's gonna be like maybe 20, 30, we'll start. But whatever you guys want to do, I don't mind waiting 10 minutes.
Okay, I'm not sure, but I would imagine the latter. He actually said that someone showed up at his office, not that he had to head out. So I don't know how long they're gonna be there.
Okay, gotcha. Makes sense. All right. Well, then we can get started here, and just like 5 seconds here. 1 second. All right. Are you guys good to start?
Yeah, let's do it.
Awesome. All right. Welcome to the Sushi Onsen AMA, where we host projects that have partnered through the Onsen program and give them a platform to reach a larger audience. Today we have OlympusDAO with us. Thanks for coming out to the sushi community, guys.
Thanks for having us. Great to be here.
So Fun Police and Zeus, do you guys first want to introduce yourselves in terms of what roles you are in the community for OlympusDAO?
Yeah. So I'm kind of behind like the economics, the tokenomics of the platform. I do some of the development work. Kind of wear a lot of hats. Yeah, but mainly those two. So kind of like mission, vision plus some of the dev work.
Gotcha.
I'm like Zeus as well, since we're like still we're still young. I wear many hats as well, but I kind of deal with the community, the marketing side, and the design side as well. But hopefully, as we continue growing, we have a very solid community manager. I can focus more on the marketing and more on the design part of the website.
All right, awesome. Well, do one of you want to start off and give a sort of like a mile-high view of what OlympusDAO is and what the project is?
Yeah. So the goal of Olympus is to build a algorithmic currency. So I think that a lot of people are familiar with algorithmic stablecoins, or like dollar coins, where they're working to peg themselves to a dollar. In our case, our goal is actually to end up in a floating state with stability, where the price is kind of arbitrary and is determined by the market, but it exhibits stability. Price doesn't change rapidly over time, and you retain a level of appreciation potential and like profit potential through supply accumulation rather than price appreciation. So kind of the thing I think that trips most people up is that we're backed by $1. And they take that to mean that we're like an algorithmic stablecoin that's trying to peg itself to $1. That is our supply constraint mainly. So the thing that like differentiates us from any currency that might just go, mint a bunch of supply and distribute it out to people, is that we have to back our tokens with assets. So we need to take in $1 for every token that we mint, which gives them meaning in that they can't just be printed out of thin air. They're not arbitrary, and it creates a like kind of a very long-term mindset driven investment thesis, I guess, because so when we take in funds, there's a level of profit attached to whatever we mint. So without going into the mechanics, the protocol sells tokens into the market in exchange for DAI. When it does so, it makes some amount of profit. If the price is like $800, it'll take $800 from them. It'll give them 1 ohm, and it mints 799 new ones to mint 800 ohm per $800. That goes to our stakers in exchange for securing the supply off the market. And that is deferred over time to create a long-term incentive to remain within the network, because your rewards are distributed on a long-term basis and on an exponential basis, where the longer you're in and the earlier you get in, the more meaningful those rewards become, even though on a epoch to epoch or a day by day basis, your balance is increasing by relatively the same amount at all times. That might have been a little too in the weeds, but it's hard for me to not.
No, that's fine. So when you say that, like, as your rewards go on, it becomes, it's like scaling up. Is that just because of compounding, or why does that scale up over time, or is that just like a hard coded like value system where your multiplier goes up over time?
No, so it's compounding. So when you buy ohm, you would, if you know what you're doing, you're going to go stake that ohm. If you're not staked and you own ohm, please go stake it. When you do that, you get a different token, which is called SOM, and SOM rebases up every epoch, and it does so on a percentage basis. So you end up with compounding rewards where, they increase by, it's generally around 0.6 to 0.65% per epoch, which is 3 epochs a day. And so, I think at this point, stakers have been rebased by a 2x. So now, even though, a month ago it was 0.65% and today it's 0.65%, that staker is now earning twice as much as they were before, just because of the power of compounding returns. That's kind of very rooted in this is the idea of compounding in the way that it defers reward into the future, because you don't really get the benefit of that compounding until like much later on, when it really starts to pick up in rate.
Okay, so this is more of like I guess maybe like a degen trader / farmer question. What
was the question?
Oh God. Listen, if I told you that I lost my train of thought, it's one of those days. I just want to remind everybody that's hanging out and listening to the AMA that this is an open AMA. So if anybody has any questions or comments or things that they thought of, feel free to raise your hand and I'll try to bring you in to ask your question. So for OlympusDAO, how long have you guys been involved?
So we launched about 5 weeks ago now. And I've been working on the project for probably almost a year now.
Oh wow, okay. So you're like heavily involved in it before it actually launched.
Yeah. So the inspiration for it came from seeing Ampleforth back in last July. They had been around for a while, but that was when they really blew up. And the idea of elastic supply, I think, is pretty huge. So the idea of, what Ample tries to be is pretty directly Bitcoin, but with elastic supply, where instead of the price changing, your balance changes. And that's a pretty powerful dynamic, but they claim that, like, I think that Ample has proved to be extremely volatile because of how, their mechanics work. So while that may serve well as an asset, I don't think that really has much of a chance of being a currency. Neither does Bitcoin. I think that these things are assets, but the fundamental mechanics are there for stabilization. It's just like kind of a different implementation, and I think that Olympus is that implementation, is a combination of control of supply plus impact on price, or like, kind of control of price. I see two things that are important. So one of them is bootstrapping, and the other is like long term. The control of supply and price is important in as a long term like protocol, securing stability in the long run. So if you think about something like Bitcoin, if Olympus were to be the scale of Bitcoin, I think that we would be very stable at this point. You start to reach levels of scale where it just takes so much money to move things that if you were to offset that volatility that does exist onto supply instead of on price, you can actually end up with something that is like quite stable and consistent. The other one is, more of a shorter term thing, and this is kind of what we're focusing on right now, is like profit potential. So to bootstrap a network like this, you need to have some level of potential to make money. That is what drives all of us DeFi degens. It is not, very few of us are actually in it for the tech. At the end of the day, you might like the tech, you might be more interested in something for the tech, but that's not what's going to actually drive you to make your decision. And I think that like that's something that can, it's good to harness it, but it's also like detrimental to ignore it. And we're trying to find like a healthy middle ground, I guess, between the two.
Gotcha. Makes sense. And Need for Speed has a question, so I'm gonna just sent you an invite, Need for Speed. So there you go.
Hi. Thanks for. So
Yeah. Hey, what's up, man?
yeah, I'm good. Yeah, thank you. There are lots of information that is being shared in the various equations and the graphics that are available on the OM group, but for a layman audience, so I saw that whole narrative is that ohm is equal to one DAI backed by one DAI, and the price is like rocketing to, and that's fluctuating. So what's the rationale behind that, that in price escalation and speed that is stabilizing in the shorter term? Another question is from the recent comments that you're here for the short term, not tech, and kind of balanced way, that those are degens, returns hungry, that drives to the for increasing network effect. So how does that play around in a longer term? So the question is that OM team is here for a longer term, or just maybe a couple of years and then maybe something else? Outcome.
So I think that if we were to be around for a couple of years, we will be here kind of forever. The protocol definitely entrenches itself more and more just as time goes on. So I'll start with the first one, which is like, why does this trade at hundreds of dollars if it's backed by $1? So right when we launched, it was pretty purely speculation. People. The whole idea here is that your balance will go from 1 to whatever. So if each token is backed by 1, you buy it at $400, and over the course of a year, your balance goes from 1 to 400. You're guaranteed that you can't lose money, because there's money to back every single token that you hold. So you have a price floor at 1. Even if price goes back down to 1, because you spent $400 and you have 400 tokens, you are fine. It has become, so this is kind of going along with the second part, where like, what makes this long term? So they're called bonds, and they're the way that the protocol takes in money, because it takes in money to mint new tokens. Through those, it's constantly, I consider it realizing its own market cap. So it's taking in funds, it's taking them off the market, it's putting them in its own vault on the behalf of token holders. As it does that, that number kind of only goes up. And so you're constantly having this increasing amount of reserves relative to an increasing amount of tokens, but it depends on what the pace is, I guess, relative one to another. So our reserves have increased massively faster than our supply has increased. It's actually funny. So when we launched, I think we had $1 for every $300 in price or $400 in price. It's now $1 for every $4 in price. So the effective backing is like 1 to 4.1 or 1.4 to 0.2. I did the math earlier today. As we continue to hoover up assets, it becomes harder and harder to kind of make the market cap go away, because it's realizing it as we go. So it keeps setting a floor higher and higher in terms of market price or market cap, and as a result, value of token holders. Where we started with $68,000 in the treasury a month and a week ago, and today that's over $20 million. And as time goes on, this is what I was saying, in the long term, if we make it years, we're never going away, is that as time goes on, that number only gets larger. So there can be a point of stagnation where it stops growing, but if it's been years and we're still around, that number should be billions, I would expect. At which point, how does this thing at that point fade into obscurity when there's billions of dollars sitting in a vault on behalf of it? So that's where the long-term mindset comes in as well, is that if you are a backer of this early on and you help to feed it up to that point, it hedges you into this position of you're kind of guaranteed to be okay. It's of course a risky thing, and so there's no guarantee that we make it to that point, but the more people I think are willing to take that bet, the exponentially more likely it becomes. And that that's where the 3-3 meme comes in, which is a pretty big part of our culture, I think, is that collectively, if people decide to make that a real thing, it becomes a real thing. They can, this is what happened with Bitcoin. If you roll back the clock 5 years, it was just a bunch of weird degens on the internet that memed this little magic internet coin into $1 trillion thing that now financial institutions buy by the 100 million fold. These things are possible. They require a level of social cohesion that's difficult to achieve, but hopefully that answers that.
Yeah, and for subsequent to that, so the treasuries are kept in DAI stablecoin, or there are plans for some other stable coins like RAI or DUC, or maybe something new that comes up in future, and how the governance decisions are decentralized for those kind of
Yeah, so for the time being, we will, with our V2, we will enable the addition of like-kind assets. So instead of DAI, it could be like Frax or ALUSD or some other USD stablecoin. For the time being, I have a whole plan for how we can use an index token to back OHM and then add new assets, and kind of do that in a way that doesn't complicate the system and instead just abstracts away what assets are held by the protocol into just an index fund. I don't think personally that that's something that we should really pursue anytime soon, just because it's a large decision that requires a lot of thought. These are things where it shouldn't be that it's a position being managed. It shouldn't be something where maybe we buy some coin right now, but we're going to sell it at a profit like that. We're not making investments with the treasury. We are allocating it towards things that are going to preserve its value. And I think that just requires a level of governance that we haven't quite reached. And I've been making pretty big efforts to get our governance more up and running. These things are definitely like difficult to do, but like we will hit a point, I think, where we have many different assets backing Ohm. It's just that like kind of pacing is important there. I also think, the best thing that we could probably do is wait on it until we have another market correction, because I think that another market correction is inevitable. And at that point, if we sit on a massive stockpile of USD when you have a fire sale on 90% of everything in crypto, the protocol is in a very strong position to capitalize on that, rather than go out and buy ETH at $2,800 a coin.
Awesome. Thank you, Need for Speed, for your question. And we have Adam1. I just sent you an invite, Adam. Yep, there you go.
Yeah, can you guys hear me?
Yeah, you sound good.
Yeah. What's up, Zeus? What's up, Omis? I see a lot of Omis in the server. Love to see it. Real quick, I guess one thing, I'm gonna ask you a question that I feel like would do a better job explaining this to the people who are not already in the Olympus Discord server. So it's on the SOM token, right? I feel like a lot of people get confused that there are two separate tokens, so to speak. We have the Ohm token and the SOM token. Obviously the SOM is pretty much just the rebasing token that goes up as each rebase occurs, which we're about to have one in a few minutes. Can you just shed some light there? What's the future of SOM? Is there going to be functionality that you're thinking about, and kind of let people understand exactly what the dynamics are there for, like what happens when you do 3-3, right? Like, we all know what 3-3 is, but for the people who don't know what 3-3 is, if you can just shed some light on what happens there.
Yeah. So SOM is a separate token, but it's always worth the same amount as Ohm. So if you have one Ohm, you go stake it, you're going to get one SOM back. Over the course of time, as rewards are distributed, it results in your balance increasing through SOM. So Ohm is a normal token. SOM is a rebasing token where it'll just increase your balance for you. This means that we don't have to require that you go and harvest your yield and do like 2 transactions to go compound what you're earning. It'll just do it automatically for you. It's also like an only up rebasing coin where you never have to deal with negative rebases. Either your balance would stay flat if there was no rebase, or anytime that there are rewards, it will increase your balance. In terms of what we're doing there, we're actually working right now on a wrapper for SOM so we can deploy it into a Rari Fuse pool. I'm pretty excited about that one. I think that enabling people to use their SOM as collateral to borrow against will be pretty huge. Shout out the Rari boys. I see them in the chat. Yeah, and we definitely want to, with that wrapper, it will enable us to start integrating SOM into other protocols in DeFi, which is a pretty important step that it's becoming time to pursue. So I think that we can expect that, like, by wrapping that and making it composable, we enable a lot of new use cases for SOM.
Yeah, so it sounds like this is an up-only rebasing token that eventually will have a lot of functionality that enables like a myriad of possibilities for people to integrate it all across DeFi. I guess, and yeah, shout out Jack. I see him in the audience. Love the Rari team. So I guess another thing real quick on that is, so these things they get rebased every 8 hours or so, right? It's like every X amount of blocks or whatever, which comes out to be about every 8 hours. And the rebases happen at a really high APY, 166,000% APY. Typically, the question that a lot of people ask, because they see these numbers and they're like, oh, wow, this is a scam, blah, blah, blah. You want to touch on a little bit about how exactly this APY is sustained? I know you mentioned it earlier in the beginning through the bonding mechanism, but if you can kind of, in like a very high level overview, how is the APY sustained? How long can certain APY sustain? And why should people not dismiss this as a scam instantly? And explain how, if you can touch on like why the mechanics of the protocol enable such a long runway for such a high APY.
Yeah. So that's a good one. I think first and foremost, the thing that freaks people out is that they don't understand the difference between APR and APY. I don't think that it's their fault at all. So, you have pretty much our entire industry mislabels APR as APY. APR is the number that you get if you take the yearly rate and you divide it by 365. That is your APR. APY is what you get when you have a return that compounds over time. So that's what we have is actual APY, where your return is compounding on itself. So you get, 10% up, and then another 10% will actually be 11% or relative to what you started with. And then, it keeps getting higher and higher because you are increasing your balance relative to what has already been increased. In terms of how we sustain these things, so we bring in money through the protocol, through our bonds, which are ways that people can buy OHM from the protocol for a discount. So it gives you a cheaper price in exchange for buying through it. When we do that, because OHM trades at a premium, it trades so high above what the protocol needs to back it with, it gets a lot of profit from those transactions. So you buy one OHM, I said this earlier, you buy one OHM for 800, it puts away $1 to back your token, and then it can mint another $799 with the other $799. That goes into a fund. That fund is slowly distributed to stakers. This is what secures what we call our runway, which is future rewards pent up waiting to go in. It's currently almost 6 months worth of rewards at 100,000% APY. I think the amount of supply in the distributor exceeds circulating supply by a factor of like 20 or 21 currently. And it's a cool self-reinforcing cycle there as well, where the more money is waiting there to be distributed, the more money should be willing to come in and get a piece of the action, which serves to fuel the protocol more, which serves to increase those rewards more, and you have this nice recursive cycle where you might look at that and say, hey, that's a bubble, at some point that's going to break, and you're right. But when it does break, the protocol still has all these assets that it's taken in. So even when it deflates, suddenly, okay, price has gone down, but the assets in the protocol are the same. So it's this idea of constantly realizing its market cap so that it can't go down below a certain point.
Exactly.
Which I think is a pretty big departure from our predecessors, where when the bubble pops, there's nothing left over, just a lot of people looking for a very small door.
Yeah. So bonding is this very important vehicle that kind of extends the runway, and as bonding sees more volume and liquidity over time, it just, like you mentioned, is this reinforcing loop. So one thing that people will often see, the first thing they'll do is they'll go on CoinGecko, they'll search up Olympus, they'll try and look at what the supply is, and they'll see this very weird number where it's like circulating supply is 150,000, but then they'll see that the total available supply is like over 2 million or something. So then all of a sudden they'll run their price simulations. They'll be like, holy shit, this protocol, it has a $3 billion fully diluted valuation or whatever. And that could deter people, right? So, and like in very simple level, a very simple explanation, it's all the money that's going to be fully diluted goes back to the stakers. So people shouldn't be deterred from this very high fully diluted valuation, because pretty much what you're doing is you're buying in a percentage ownership of the protocol at the current valuation, and that percentage ownership of the protocol that you're buying in currently will consistently be rebased upwards. So if you buy in 1% ownership at 100 million, you put in $1 million at $1 billion, you will still own 1% of the protocol, correct?
Yeah, to a rough degree. So it's not perfect, but it's served roughly like that thus far, and we've probably had the most dilution that we will have already, just with bootstrapping so much funds relative to where we were at in market cap. But yeah, I think that's a really funny dynamic, because most people will look at that, and the way that you're conditioned to it from other projects is the difference between circulating supply and total supply is what you're going to get diluted by. Generally that's how it works, is that you're not going to get any of those tokens, and so that is all taking value away from you and giving it to someone else. In our case, basically the entire difference is money that will go to you as a staker. You get your proportion of that. That's what you're just saying. So it's actually funny in that, people look at that and I think it definitely freaks them out, but I think that it's actually like a very positive thing if you understand it. The fact that that is now like 3 million in total supply, especially since, a week ago, that number was, 200,000 or something. It is much larger in the last week, and that I'm sure has freaked some people out, but I think it's because they don't understand what it means. With that, it's actually something that we are improving in our V2. So in the V2, instead of pre-minting the coins for stakers, that will be accounted for within the treasury. And so the treasury will keep track of what needs to go to staking, but it won't mint them until it actually goes to stakers, which means that our circulating supply will actually be our total supply, like on CoinGecko and on these analytic services.
Yeah.
Because it
So
also
in terms
messes
of
up
optics,
their APIs.
yeah, exactly. So in terms of optics, it'll definitely look a lot better.
Yeah. I think if you understand what the information is, it'll still be readily available to you. But I think it's bad that for people who don't understand what it means, it kind of slaps you right in the face, and you're like, I need to stay away from this because I'm going to get diluted, 1 to 200 or 1 to 20 or whatever.
I have one last question before I don't want to steal the show from Magic Turtle, but I have one last question for before I drop down. So I guess you mentioned a little bit about V2 and some of the stuff that you guys are exploring there. One thing that I think we know internally, but maybe we can share this externally with people who aren't part of the community yet, is you mentioned briefly at the FOMO event, which was the event that we held at the 1 month anniversary, something about multi-asset staking. Can you maybe touch briefly on what how that would happen and what the mindset was behind introducing that?
Yeah, so I mean, I see that as a pretty massive step in like enabling new functionality here. It'll effectively be a form of on-chain leverage that is liquidation free. So as a staker, you'll be able to stake your own, and when you do so, the protocol looks and it says, okay, you just staked in 10 ohm. I have 10 DAI here backing your coins. What do you want to do with them? You can say, hey, I want to go plug them into a Rari vault. I want to earn some of those juicy yields. It says, cool, bet. Let me throw it in there. I'm now going to back your own with this RSPT. Now your balance is dictated by the value of that RSPT. So, you come back in 6 months and that is worth $11 now. You've gotten a 10% says you started with GNOME, underlying has come from 211. You now have a GNOME, but you're also from third. So you've earned rewards, also earned whatever you're under.
Are you guys hearing Zeus?
Can you hear me?
Yeah, well,
Yeah,
it was all going glitchy for me.
Yeah, Zeus, it's pretty choppy. Maybe your Wi-Fi is a little bit laggy or something. If you can, I don't know if you caught that. It was very laggy. A lot of that last part.
Yeah. I think it is on users. It just started happening.
I think he was just dropping too much alpha. The mic didn't want to let us. That mic didn't want to let us get it. Still recovering. Too much alpha. It was on fire.
Right back.
All right, Fun Police. You gotta take charge.
Let's bring. Why don't we? I don't know if Jay and Jack are in the audience. Maybe we can bring them up and see what their thoughts are on Olympus, and because I know they've been involved early on, and maybe they can riff a little bit about the Fuse and Olympus integration from their end. We've heard Zeus talk about it, but Jack and Jay on the spot if they're not ready. But I'm sure the community would love to hear
Sure,
from them too.
if they would like to raise their hands and come up and speak, that'd be that's all
We
good.
want you, Jay. Come on. Oh, there we go. Jay
I
raised his
also-
hand. Let's go.
I also briefly wanted to make sure we illustrated what the 3-3 strategy is to people who may not totally understand it.
Yeah.
I don't know if Adam or Fun Please or somebody
I can.
else.
So yeah,
wants to-
I mean, I
go ahead.
kind of. Oh, did we got Zeus back? Yo, Zeus.
Yeah, is it any better now?
Are you still?
Oh yeah,
much
there we
better.
go. Perfect timing. Magic Turtle wants to touch like a lot more. You know, he wants to hit the nail on the head with the 3-3 strategy. So if you can kind of cover that real quick, and then I think Jay is going to join the stage and touch on the Olympus and Rari integration from his end.
Okay, cool. Dang, sorry that
But
cut
finish,
out.
you can finish your thought though. You can finish your thought on the multi-asset staking first before going
Okay,
to
how
3-3.
far did I
Yeah.
get before it cut out?
Did
you hear any of it?
about, yeah, like literally like the first
From the
quarter.
beginning. It was probably
Okay.
like the beginning.
Yeah, so basically, you have 10 ohm. You would stake those 10 ohm. The protocol says, hey, I have 10 DAI here to back your ohm. What do you want to do with them? You tell the protocol, hey, I want to take that 10 DAI and plug it into the Rari stable vault to earn, 20% APY. It says, cool. It does so. It gives back RSPT, and now your ohm is backed by RSPT. So you come back 6 months later, your RSPT has earned 10% yield. So you say, I want to, withdraw my ohm back for whatever reason. It says, okay, cool. So you started with 10 DAI here. Now it's worth 11 DAI. So your base is now from 10 to 11 ohm. But then, you've still been staked this entire time. So your balance from staking has gone from like 10 to 30. And so it says, okay, your staking has earned you 20 ohm. Your backing has earned you 1 ohm. I will give you back now 31 ohm. It's a way of kind of gaining exposure to other things while still retaining your staking exposure. And it's cool when we expand it to other things. So, we're going to roll this out in like a constrained manner because we're going to have to see what kind of market dynamics this produces. But instead of RSPT, let's say that you want ETH. And so, you buy 0.01 ETH with your 10 DAI. And now your balance is dictated by the price of ETH. So if ETH were to go up by 10%, now you have 10% more ohm. If your ETH price went down by 10%, you now have 10% less ohm. You have that ETH exposure in addition to your ohm, but it's on top of your balance. And so your actual value is dictated by the price of ETH times the price of ohm. So it multiplies these things together instead of with traditional borrowing where you add your exposures onto each other. So you have some amount of ohm or you have some amount of ETH, you borrow DAI, you use it to buy wrap Bitcoin, and now you have ETH plus Bitcoin. In this case, it becomes ohm times ETH. This is I don't think I've ever seen this done anywhere, and so we're gonna have to kind of like take a phased approach to it. But I think that it's gonna be extremely powerful. And it should serve to like, my goal with a lot of these things is that we want to position Olympus so that you can do anything through us that you can do anywhere else. So we hold these funds on your behalf and we'll do with them what you want to do with them. So you could go and you could, buy ETH and you could plug it into Rari and earn yield there, or you could have Olympus or Ohm, and then you could tell the treasury to go buy ETH with your backing and plug it into Rari. You can do the same thing through us, but you get the additional exposure and yield through holding Ohm. I consider it like the base camp of DeFi, where everything else that you can do in the industry, you can do here, plus what we offer you. And it becomes, I think, a no-brainer of why would I go do it anywhere else if I can do it here plus this. So that's multi-asset staking. In regards to 3-3, 3-3 is like our version of probably the most prevalent mentality in markets ever, at least in the last 100 years, and it is that if we, as a community of people holding this asset, decide collectively to keep the supply of it off the market, we can allow the price to kind of perpetually increase. So it is very, very similar, if not the same thing, to hodling with Bitcoin. The difference here is that, if you stake, your balance is constantly increasing. So the idea with 3.3 is that if everyone who is staked doesn't take those staked coins and sell them, they effectively don't exist. Supply is, twice as big one day as it was a couple weeks before that. But if everyone is still holding on to those coins and they don't sell them, it's, in terms of actual circulating supply, the same. This is how Bitcoin has increased to, trillions of dollars. This is how the stock market increased to trillions of dollars, as if, you are among the boomer generation, or your parents are, or whatever, that like the mentality there is generally that you buy stocks and you just hold on to them until retirement and you never sell them. That is HODL. That is 3.3. These are just how markets grow. This is how collectively as people we can allow like wealth to accumulate through markets. Is just that like you can never allow it to happen if everyone is constantly selling into it. Wealth can never develop through that. Because you're constantly forcing it to deflate. Like the whole wealth creation mechanism of a market is that you create value that wasn't there before and kind of shouldn't be there, because not everyone can ever claim it. If everyone were to go and sell price is going to go down. Just like if everyone were to go sell Bitcoin, price is going to go down. If everyone goes and sells the S&P 500, price is going to go down. It's the exact same for all of them. It is a mentality that the holders have that allow them to grow to such a large state. And that's where 3.3 really comes in and is important, is that we can kind of will this thing into existence. It just kind of takes a level of cooperation, coordination that I think is really strongly like imbued by just like such a simple little meme.
So before we bring up Jay, I actually want to kind of riff on that just a little bit further. You mentioned, so like it's like one of the strongest memes. It's what's kind of just it's taking a strategy that's been around for 100 years and you're just implementing it again to Ohm. So currently, right now, we call our Ohm Discord members and Ohm holders Ohmies, a cool little name. And so currently we have about 3,400 Ohmies. Meaning 3,400 people holding and staking or bonding or whatever, just interacting with the protocol. This has been done very organically. There has been little to no marketing. There has been no, crazy. I don't even know if you guys have paid any marketers or anything like that. There has been one little internal event. Exactly. Yeah, so none of that. No money spent on marketing. There has been one little internal event that was held for the Ohmies, where we had Fiskantes and Chow Wang and a couple others talk. But do you have any plans on and the 3.3 meme has like permeated a lot of crypto Twitter, right? Like you see that pop up in all sorts of servers. And you love to see that as in an early project, like you love to see that growth, organic growth especially. But do you have any plans on onboarding the next 3,400 Ohmies, the next 34,000 Ohmies? Like how do you intend on going about that? Or do you think that this has already become a beast in and of itself, where organically we can just continue to permeate through all of crypto Twitter and beyond that eventually?
So I see it as kind of a mix of the two, where we can do what we can to facilitate and help this, but it really comes down to just like Ohmies creating more Ohmies. The only way to really scale this thing, I think, is through network social effects, where one person can never reach that many people. Even the most connected person can only reach some number of people. But if they reach n people, and then those people all reach n people, you can exponentiate that network. This is by far probably the most powerful force in like human society. It's just like, this is what tech giants run on. This is what currencies are based on. It's just this network effect of people spreading. You get pilled by someone and then you go pill other people. And I think that it's really important as well that we don't pay for these things, and that it needs to be organic. When it's not organic, it becomes insidious almost to a degree, I think, or at least it starts to flirt with that. These need to be things where it comes from you as an individual believing in something. And you make the choice that you want to share that with other people. And that is also the most effective way to do it because it's authentic. It's not that you're getting paid off to do it, it's that you want to do it because you think it's cool. And those are the things I think that really scale, because you can only scale so far if you have to pay for something, because you only have so much to pay them with. Versus if people do it voluntarily, that can go infinitely because there's no cost to it. It's just people with free will, sharing with other people, which, isn't that the whole, I feel like that's the whole goal of like all of this, especially with like NFTs rising and stuff. Like it's kind of the same idea.
And it seems like that's what's heading, like that's what we're heading towards like internally for Olympus, right? Like we're seeing new people pop up in the server every single day, and a bunch of OMIs just hop in and help with the education, explain the runway, explain the bonding, explain all these separate features. And that's kind of like what allows this organic culture and what allows people to continue to come back to the server. I mean, I remember you even posted on the monthly review how much like the retention rate is, right? For how often people stay and actually send messages and stuff. And that's magnitudes higher than what a bunch of other servers are seeing.
Yeah, I mean, that's probably the thing that I'm most proud of, like through all this, and I don't even know how much credit I can take for it, but like, just the level of engagement that people have, and like they make it a place that I love to hang out in. Like I feel truly blessed to like get to interact with as many people as I do on a daily basis that like, just have similar mindsets and are like looking to learn and like talk about cool things. And like, it's awesome to me as well, like how often things will stray away from Olympus and just onto like, whether it's other projects in like a non-shilling way where it's just, hey, this is cool, or it's, talking about things in like just like life, or like we have the Healthy Omis channel that's about like mental health and physical health, and like we got a book club, like all these things that it's just like I feel like it's a real community. It's not just so focused on like the tech and on the product or whatever. It's like focused on creating an actual community of people that like, somewhere that you can feel like you belong, and that other people will support you and like make you belong. Which I think just in general, like in life, like that's so important and powerful.
So I don't want to take too much of a tangent here, but one thing that typically happens when communities grow large and when tokens grow large, and when we see like, for example, SushiSwap's a great example of this, and various others, Aave and all these other bootstrap DeFi protocols that grew to such a large stage where, essentially too big to fail and are completely integrated into the entire DeFi ecosystem, is you start to see centralized exchange listings. How would that dynamic work for Olympus with 90% of supply staked? Let's say Binance or FTX approaches, or even Coinbase Pro or whatever approaches and says, hey, we want to there's a lot of volume happening around Olympus, we want to get Olympus listed on our platform, except a really large percentage of the supply stake. Have you given that any thought yet? Because I've seen that question pop up a little bit here and there in our server. And this is probably going to be the first time you're going to be talking about that. So if you can share any thoughts on that.
What's the question?
So he's asking if we can be listed on any centralized exchanges.
How would that work? The dynamics of a centralized exchange listing?
Well, I mean, you kind of hit the nail on the head, which is that most of the supply is staked. So where are they going to get the supply? There's something in there. Yeah. So, I mean, I think it remains to be seen. Like there's a possibility that those exchanges could like plug their idle ohm into staking while it's not being traded. But if not, I think that would be a fantastic thing for the stakers that we have, just in terms of they're going to have to pull supply out of staking and into their wallets. And it's just going to sit there as, idle ohm, waiting for, the people that they own it on the behalf of to trade it. So one, that'd be great from like driving volume, increasing access to people that might not know how to use SushiSwap, that might not be experienced with dexes, just don't have exposure to it, just in terms of like knowing about it. Like a lot of people, at least with like Coinbase and Binance, they don't really actually go out into the crypto Twitter universe or like, get into Discords. They just like know what's in front of them. That would be really big. Yeah, and just I have one more thing that has now blanked. So I guess we'll leave it at that.
No worries. I know I don't know if Jay still wants to come up, but yeah, I'll hand it off to Magic Turtle.
Yeah, PTP has had a question. I don't know if hopefully he's still listening. Okay, well, I invited PTP, but he's not responding right now. If the J, I forget their name. I think they're with
Jay and Jack they're both in the audience. Let's see.
Yeah.
J. Rari Capital.
We took his hand off.
Yeah, if they wanted to talk
there we
about
go. J's for the people. Let's go.
Integrations coming for
J's for the
Olympus.
onlys.
Yo, what's up?
Yo.
It's good.
BBZG.
Hey, PTP, you just hold on 1 second. We'll get to your question, I promise.
That's a sick profile picture, PTP.
So Jai, you guys are working on integration for Olympus positions and Rari?
Yeah, I can talk a little bit about this, but essentially we have our Fuse platform, which enables anybody to launch their own money market. So anybody can come in and launch their own compound finance, essentially with whatever assets they want, whatever interest rate curves they want, whatever oracles they want, right? So one of the cool things being an OMI is like, let's set up a money market with OM, DAI, maybe a few other assets. And what that will enable is a few cool things. The first is you can suddenly borrow against your staked OM. So all that capital doesn't just have to sit there, but your staked OM can start working for you. Instead of just having like, let's say $100,000 worth of staked OM, maybe you could go borrow $70,000 against it. Suddenly you have $70,000 of loose capital. That loose capital, you could really do whatever you want with it. But one of the cool things that you could probably do with it is go and buy more OM. And suddenly you have a system where you could take out leverage on OM. And there are two reasons that I'm really excited about it. The first is I just love OM, leverage against my OM, being able to borrow against my staked OM. That's really cool. But then the other is in this pool of assets, right, where you have OM and you also have DAI, is it'll push the DAI interest rate up so much. So if anybody's sitting on stable assets or like literally any USDC DAI or anything, the interest rate you'll be able to earn in this pool in itself would probably be reaching parity or right underneath staking rewards. What that means is suddenly you won't be able to just earn like hundreds of thousands of % against your OM, but you can do that with DAI and USDC, which is really cool. And then we can feed that yield back up to our yield aggregator. And suddenly it creates this really, really interesting cycle. And I know that Zeus earlier on this call was talking about, okay, what happens if you can go and mint OM with RSPT? Suddenly that RSPT will be growing at a enormous rate because it's feeding the borrow demand against the OM. And these are all just some of the really, really interesting things that I'm excited about right now.
Can I just riff off that?
Yeah.
Okay. Now, the normal rate that you expect from DAI is like 10%. So, this is offering you thousands of % on DAI. That's probably going to attract more DAI, right? And then because it attracted more DAI, now there's more DAI available to borrow, which, perpetuates that. And it almost seems like this black hole dynamic of, money just gets sucked in, which makes room for more money. I mean, these things are cyclical, and like obviously nothing ever goes up forever, but like, the dynamics here of like having something left behind, like I'm very excited about that one because these are just really powerful recursive cycles that one can go on for like longer than you'd expect them to. If you generally look at like, everything, like you look at something, oh, it's a bubble, and like, then you look back 2-3 weeks later and it's way higher than it was when you identified it as a bubble. Like, it still is a bubble, but that doesn't mean that when you identify it means that it's over. but having the power to realize those things as we go means that like we continue to suck in these assets that never go away, and that we're gonna see, because like that one seems like a very powerful dynamic. I don't know. I'm excited about the fuse pool.
Yeah, no, I totally agree. The fuse pool sounds extremely exciting. That you can, I mean, essentially, like just lever, like the ability to leverage up your. I mean, also you can take out assets, a loan against your own position and go do something else with that. But I think the leverage is really the most powerful utility that is coming out of the integration.
Yeah, and the fact as well that expands it to like the stables side as well, where it's our yield gets expanded onto the counter asset as well, where like our crazy APYs start to spill over onto the APYs of assets that would generally yield very low, because people are yielding so much over here that they're willing to pay a very high rate over there. So that it's cool, and that like providing liquidity in DAI or whatever, USDC for that fuse pool is kind of a way to gain access and exposure to Ohm without actually owning it, in like a roundabout way. So that should be cool to kind of like expand our reach while allowing for more conservative investors, I guess.
Yeah, and okay, so I wanted to get to PTP. You had a question, man? Okay, I don't know. I guess he's AFK.
He just came in to show off the cool profile picture.
Oh, it seems he doesn't. You're muted on your end, PTP. I've not muted you. There's a microphone button in the bottom left of Discord next to your profile picture. Has like a mute.
If you see a red slash, you want to click on it.
It's also possible he's trying to speak into a microphone that he does not own.
I hate when that happens. I'm gonna going off that last one as well. I'm not gonna say what it is, but like the idea of allowing people to dip their toes in here. Oh, okay. I guess I'm not leaking the alpha.
I feel like such a my Chrome was set to block Discord for Mike.
Oh, gotcha.
Appreciate the appreciation for my picture, Datom. That's my feeling. But anyways, so I had one question because I aped into this shit without really knowing how it works. So I hope you can answer my question. It seems to me that because this bonding is going on and there's a discount given on Ohm, there's this incentive for capital to come in. And because the minting limit is only one DAI and that doesn't equal the market cap or market price, you have more to mint, right? And then that runway keeps getting laid down ahead of you. I guess your supply keeps going up, like whatever you have staked. And that's why you want to be staked, because you don't want to be diluted like you would think, but you're staked. That's why you're getting that extra, right? And then so that's why the price doesn't matter. You just keep your thing staked and you just get more and more and more as it grows. All right, or no?
Yeah, you're spot on so far.
All right, cool. Now I feel great. Thank you. I know my money is safe, so I'll leave now.
Hell yeah. No, that was perfect.
Awesome. Thank you, PTP. Well, we're getting close to a place to wrap up. I don't want to leave any questions out though. So if anybody has any questions that they would like to ask, or comments or concerns or riddles or if you have a good
Yeah.
joke, you know, I would take
I have
that.
one thing. So I know Zeus has mentioned a little bit about V2, and I know we don't want to commit to timelines, and especially also regarding the Fuse integration, don't want to commit to timelines, but you know that's going to be a question that a lot of people are always going to continue asking. So in terms of saving you time down the line, maybe you can touch a little bit on any potential timeline that you have regarding both of those, so people can have a kind of an answer, so they don't have to keep asking you a million trillion times. So yeah, I guess for V2, what are you thinking for the Rari integration? What are you thinking? And then maybe even like just give people a little crumb of alpha and maybe give them a little bit of an idea of what you got thinking for, I don't know, 3 months down the line, 6 months down the line.
V2, there will be at least information in June. We're cranking these things out, and you know, I think it's funny that like the multi-asset staking has been leaked, but that's like probably like the of the list of like 3 or 4 things, that's like one of the ones that I'm least excited about. And then so that we should be given info in June on what'll be in there. The Fuse, I think, will be nearer term. We still got to kind of hash out how we're going to handle the SOM. I think that we have an implementation that's going to work, and then we're going to put that to a forum post. I was supposed to do this earlier, and we wanted to figure out how we were going to implement it before really like, you know, trying to decide like how, like figure out the how before we like decide which one to go with, I guess, just to make sure that we're not going to debate on something that turns out to just be technically infeasible. So that will be up by at least Monday at the latest, I would say, if not this weekend, and then we can kind of discuss that for a couple days. And then I think that we can get that out, you know, relatively quickly. I'm biting my tongue. I'm not going to leak V2 things, but I think that those will be cool. And then we got a couple of cool like potential partnership integrations that could happen. That you know, a couple. I've seen a couple of speculations that are getting close to it. So
Potentially.
that way you will.
Too much alpha, sir, please.
Potentially.
That's why I'm here. I'm trying to stop Adam from letting Zeus leak the alpha. Let's
he's
leak
the
the
fun
for
police.
V2.
All right, but you still didn't answer. You got one little crumb for the homies and for some of the sushi audience. 3 months, 6 months. What's if you want to? I'm not making you do it. One
Well,
tiny
I'll
crumb.
say what I was gonna say a minute ago. That like the idea of, you know, kind of getting to dip your toes in here without taking on exposure will be enabled, or without taking on risk. So
Write that down.
yeah, there will be risk-free options that serve to the mutual benefit of everyone. So
Risk-free strategies.
Hell yeah, man.
Awesome.
All right, I'm gonna get Chalky in for the last question. Apologies to anybody who just missed the raise hand button, but Chalky beat you to it. Unless they're AFK. Why are they all AFK?
I think they're market
Blame it
buying.
on me.
Nah,
What's up,
they're
Chalky?
market buying.
quiet.
They can't resist anymore.
Too much leaks.
It's Chachi, like from Happy Days.
Oh, Chashi. Okay, my bad. My bad.
Chachi. I've asked it a lot of times, and it was kind of answered by Zeus, but I still don't feel like I got a clear answer. And I've been asking about the 3-3 thing for a long time, and the only thing is, what does it represent? Does it represent like that you get 3 rewards a day, and it stakes it 3 times? I mean, what is the actual?
Okay. Yeah. Okay. So there's a Medium post that I wrote like a month or 2 back. So the actual numbers are pretty arbitrary. If you've ever seen like a prisoner's dilemma game theory table, that's what it's based on, and it's kind of the idea that like the strongest outcome of the game is a cooperative outcome where, you know, you have these different levels of reward, based on actions that you take. So like the 3 actions in the example are that you stake, or you buy and you stake, you buy a bond, or you sell. And like staking, if both stake, then the outcome is 3-3. If both sell, the outcome is -3, -3. If like both bond, it's 1-1. The numbers, and I say this in the post, like the numbers are pretty arbitrary. It's just kind of demonstrating like the level of benefit is largest if both people are just staked and accruing those rewards without selling. If one sells and the other stakes, it's like 3, -3. It's kind of a neutral outcome. But both staking, positive for both selling, negative for both. Kind of. We'll link you the post in our Discord, and you can check it out. I think it'll probably explain it.
Thank you.
We expect to see that in your username now.
Yeah.
All right. Thank you, Adam, for your questions and participation. I think
no
we're about
problem.
to wrap up.
Yeah, I'll move to.
All right. So yeah, thank you, Zeus and Fun Police, for coming out. Especially like, I mean, like a huge portion of the OHM community coming out as well. I really appreciate it. All the participation. What is like the Twitter handles, and what are the social media links and websites that people can find out more about OlympusDAO at?
Yeah. Great to be here. Thanks for having us. This was a lot of fun. Twitter/OlympusDAO, discord.gg/OlympusDAO, olympusdao.medium.com. Am I missing any, Fun Police?
No, that's basically all of them. You can even go on our website, OlympusDAO.finance, and most of our community links are there.
Awesome. Well,
Definitely
thank you
get
for
in the Discord though, if anywhere.
Mhm.
Yeah, if you want to learn more about Olympus, come to our Discord. We have a channel with questions, and everyone in the community is like, it's amazing. Like, they'll help you out.
Yeah, Discord is definitely the best way to like answer questions you have about like some DeFi protocol or something. That's at least always been like sort of like the best communities that I've interacted with. It's been through Discord.
For sure.
But yeah, thank you guys for coming out. It's been great talking with you. Appreciate your time. And yeah, stay safe. Take it easy, and excited for all the future alpha from OlympusDAO.